Welcome to this Nickel Industries presentation. Nickel Industries is the world's largest listed pure diversified nickel producer, producing a suite of diversified nickel producers. We've been a long-time participant in the Indonesian nickel market, where we've invested over $3 billion US in debt and equity, and that makes us the largest foreign investment, surpassing even the ANZ Bank. We have a current market capitalization of US $2 billion. We delivered adjusted EBITDA of US $297 million in 2024, and at a current share price of 71 cents Australian, with a current EV/EBITDA multiple of 9.5 and a dividend yield of 6%. We think there's still a lot of value in the stock, particularly given that we have some near-term catalysts that are expected to take the business from that $297 million US of EBITDA in 2024 to in excess of $1 billion US in EBITDA on a consolidated basis in the next under 2 years. We have a very strong record of delivery, and we sit at the very bottom end of the cost curve. So that's what has allowed the business to maintain being a material dividend producer, deliver strong EBITDA despite a very weak nickel price environment. That said, any improvement in the nickel price, given our significant volume base, will deliver a cash windfall to the business. Mentioned we're a diversified mining company and processing company. We produce a number of products. So from the mining side, we produce low-grade limonite ore, which goes through high-pressure acid leaching plants to produce a mixed hydroxide precipitate, nickel and cobalt sulfate, and nickel cathode. And these are products that are consumed in the EV battery market, as well as aerospace and alloying industries. Our higher grade saprolite ore from our mine goes through rotary kiln electric furnace facilities, which converts that ore into nickel pig iron, and that nickel pig iron is used in stainless steel. So that's really the key to our business, is that we're integrated across the mining and processing chain, and we produce a diversified suite of nickel products, each with their own supply-demand fundamentals and pricing and margins. If you look at the history of our operations, we've delivered very strong EBITDA despite a challenging nickel price environment. So if you look back at 2021 in the top left there, our adjusted EBITDA was US $243 million. It grew to $339 million in 2022, $407 million in 2023, and $297 million in 2024. That's despite a weakening nickel price. And you can see back in December 22, we had a nickel price that it's close to 30,000. Today we're sitting at around 15 to 16,000. How we've been able to achieve that is volume growth. And if you look at our processed nickel in 2021, that was 40,000 tonnes. In 2024, that's 136,000 tonnes. Our mine ore sales have grown from 2.3 million tonnes in 2021 to 9 million tonnes in 2024. Throughout that whole period, we've been a consistent dividend payer. You can see there it's been 4 cents per share, except for 23, where it was 4.5 cents. The positive and the good news is that volume growth is set to continue, both in the processed nickel and in the mined ore sales. And I'll talk about what that growth looks like and where it's coming from. We have 3 key catalysts that are imminent to the business, and these catalysts are fully funded and will deliver a significant increase in our current EBITDA. First of those is increasing our mine ore sales from 9 million tonnes to 19 million tonnes. That additional 10 million tonnes at a $10 margin, which is the margin that we made last year, will deliver an additional US $100 million in EBITDA. As I said, requires no capex. We have what's called our ENC HPAL commissioning in the second half of this year. This is the first HPAL globally to produce 3 of the key Class 1 nickel products, that is MHP, nickel and cobalt sulfate, and nickel cathode. It has a nameplate capacity of 72,000 tonnes of nickel, and using a $7,000 a tonne margin, which is the same margin that an HPAL called HNC, that we have a 10% interest in, delivered last year. That's an additional $500 million in EBITDA. And again, that project is fully funded and commissioning in the second half of this year. And then finally, we have a new mine acquisition, the Sampala mine. The target there is around the end of the first half to deliver first ore from the Sampala mine. Our target there is to produce at the same rate as our Hengjaya mines, so 19 million tonnes, again at a $10 a tonne margin, is an additional 19 million, is an additional 190 million in EBITDA. All of this growth is fully funded, and all the numbers that I've just run through then, that assumes current margins. So all of this growth is not predicated on margins growing to where they aren't today. It's purely on current margins. And so back to the earlier comment, any increase in the nickel price will be a significant beneficiary of that. We are the beneficiary of a unique set of guarantees from Tsingshan, who is our partner and largest shareholder. If you look at every project that we've done historically, which you see listed on the left-hand side there, those projects have come with a CapEx guarantee, so we take no risk on any CapEx blowouts, a nameplate guarantee and a timeframe guarantee of no longer than 2 years. If you look at every project, it's been delivered ahead of that 24-month timeframe guarantee, in some instances as much as 8 months. And then if you look at the performance, all have operated well above nameplate capacity and at the HNC HPAL up to 40% over nameplate capacity. So very strong track record of delivery and execution. With this significant growth that's coming online, we feel that we're yet to see that factored into our share price, particularly if you look at an EV to EBITDA multiple. If you take that growth that I've just talked about, our forward EV EBITDA multiple is around 1.7. So we don't think that that CAGR growth is factored in. And if you look, we are one of the highest growth multiple companies in and amongst the ASX 200 world. So as I said earlier, we don't think that significant increase in EBITDA and nickel units is yet priced into our share price. So we think it's an excellent investment opportunity. As I said, 3 near-term significant catalysts that will take the business from that sort of 300 million EBITDA to in excess of $1 billion EBITDA. And any small improvement in the nickel price goes immediately to our bottom line. And that ends the presentation. Thank you for your time.